There are companies out there, and I'm going to use Facebook as an example, whose price per earnings, right? Share price over the earnings is about 13.62 currently. Understand that it's always been over 20, sometimes over 30, sometimes in a bull market over 40. At 13 times earnings, Facebook is cheap. Meta is cheap. Meta historically outperforms. So I'm going into Monday and I'm saying to myself, every time the market spikes, I'm probably going to sell my assets, wait for it to dip and re-enter because I believe the market has support. So you hear the number, people are talking about the SPY going to 380 or 400, and understand there's like $14 million worth of puts the last 10 or 15 minutes of the market on Friday. So people were expecting possible things. Now, what could be strong for the market is it shows support at 420. We can talk about the support levels were 433, 428, 424, 420, 415, 409. So when I mean support levels, it means once it breaks through the level, it will likely touch the next level, which is support, and then it'll bounce off there. So here's the other thought process. I'm thinking that the market will have to completely sell off one of these days. So every time it spikes, I'm planning on letting it dip. Now, here's what I'm looking for. I am looking for capitulation because every time the market bottoms, there's one day, one morning, usually it's in the morning or it could be an afternoon, but one morning where it just capitulates. Futures are off. The market gets ripped. They continuously sell off. It's down over 3%. I mentioned 3% because 7 days in 2022, 7 days this year, the NASDAQ has moved up or down 3% in one trading session. 7 days. All of last year, 2021, right? Volatile year because we all were dealing with COVID. 5 days, the NASDAQ moved up or down 3%. 5 days last year, we're about 50 days into trading of 2022, and the NASDAQ has moved 3% in one direction or the other at least 7 times. We're just getting started. Are you telling me that it could potentially do it 30 times this year? Yes. The market is going to be extremely volatile. So there are times to enter. When I point out floors or ceilings and you see it break through or show support, if you see a nice bounce, that's showing support. If you see it flutter around like 419.80 and it just flutters like this, it means there's no intense buying and it's probably going to drop. So then your next level of support's 414, 415. So you watch it get to 414, like 14 or 414.20, right? And then all of a sudden, it'll just bump someone, an institution, a bank, someone's buying. But here's what I'm thinking. I look at Facebook. I look at Robinhood. Yeah, we all hate Robinhood. But at this level, Kathy has her position. There are so many hedge funds and institutions that have position. It's 66% owned by institutions. Less than 1% of insiders own Robinhood. So I'm saying to myself, 3 straight inflow days. Friday was an outflow day, sold off heavy. And yes, I heard there were some insiders selling, but they own less than 0.7% of the company. I mean, it's so minute. There are more short sellers. 3 days of inflow. Kathy's positive on it. I've got no doubt that one's going to bounce to 14. Then we got Facebook. So yeah, I mentioned Facebook over the weekend because I think it's at like 169, 167, 168, something like that. Its PE is 13.62. It's forward PE. And let's say they outperform next year. Let's just say they crush earnings like they used to do 2, 3, 4, 5 years ago because Mark Zuckerberg knows what he's doing. So they crush earnings. They beat by like 30%. Well, that would make their PE about 9. So you're telling me you get a company, a forward-thinking meta company like Facebook, potentially for 9 times its earnings. It doesn't make sense. So yeah, now that I think of it, Facebook's got to pop, and it's got to pop soon. Okay, let's look at Google. Let me see if I can pull up the Google chart. So what are we looking at, okay? Let's remember in February, there was a huge sell-off, right? The market dropped about 12% in about 3 or 4 trading days. All in all, it was off 15% from its highs, okay? So let's just take a look at Google. They moved it past 3,000. Man, it would be right around here, right? 25.37. Let's just see where Google is right now. 26.09. So if I say 25.37 would be a great entry, that's 80 points ago. I mean, it probably could have seen that on Friday. Let's just see if it saw that. No, 26.05 was the low. So it closed towards the end. Inflow, inflow, inflow. 3 days in a row. These days cancel each other out. 3 outflow days because we know the market was extremely weak and it bottomed again. What do we call that? A second bottom. So let's look at it again. Tuesday. I mean, if anything, you'll see a third bottom maybe tomorrow on Monday. But at 25,550, I'm buying Google. Why? Because there's a good chance I'm going to get a 10% bounce within the first couple of months. Then if you look out to a year, there's no doubt that Google will continue. If you look at the bottoms right here, bottom, 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 even if we were to stretch it out and say longer here, you're still going to see within a year, probably 3,300. So if you're in it, 2550, let's say you look for the 50-point deduction on Monday, 2550 you're in and you get 3,300. That's an 800-point swing. That's about a 32% swing. So you say to yourself, all right, man, I want to be safe. I'm going to be safe. I'm going to buy Google at some point this week. It's going to dip. There's going to be a tough day in the market, whether it's Monday, Tuesday, Wednesday. Why? Because the market's speed up. There's a war going on. Oil prices are spiking. There's inflation. We all know that. The mighty dollar's going up. Interest rates are going up. Inflation's going up. The Fed will meet next month. So the point is, at some point this week, you could say, Matt, I'm going to get Google for $2,500 a share. So you get Google. Yeah, I made it a flat number so it's easier to follow. $2,500 a share. You sell it for $3,300 sometime in the next 12 months, probably by the end of the year. But let's just say sometime in the next 12 months, $800 per share. That's what you're making. You're paying $2,500. So you're making about 32, a little over 32%. That's what I'm sharing with you. So you want safe, you want secure. Now, what makes Google, and I hate to make this whole video about Google, what makes Google so safe and secure? Easy. It's an industry leader. It's one of the largest cap companies out there. Its market cap is $1.72 trillion. So yeah, there is stability in Google. There's many revenue sources, psychology behind trading. When people start putting their money back into the market and understand there's like trillions of dollars in the sidelines on the US side looking to invest in the US market, just waiting for the bottom to be called. Once the bottom or the floor is called, they will be investing. So their first investments are going to be main stocks like Google, which is Alphabet, right? Facebook, Netflix, it'll be FANG, Apple. They'll probably be buying Tesla, things of that nature. So that's why I'm saying Google has support right there. There's no doubt about it. So that's what I'd be looking at as far as the SPY. I told you earlier, check out my next video and you will learn some more.